address the road ahead. Let's bring in my colleague Puneet for a summary of the key highlights reported so far in terms of Q4 earnings.
The large cap IT players, TCS, Infosys, as well as Wipro, we just look at the 5 key metrics for these companies. They reported results over the last week. Specifically, they were weak numbers. Let's pull up the first table. Constant currency revenue growth, -0.8. It fell by 0.8% for TCS, down 3.5% on a constant currency basis, quarter on quarter for something like Infosys, as visible on your screen, and similar for Wipro, not the greatest quarter essentially. And while this was baked in estimates for quarter 4, it's still a very weak number, ending FY25 on a somber note as well. EBIT margin growth was down 30 basis points for TCS, 20 basis points for something like Infosys. They did have a salary hike impact as well on EBIT this quarter, while for Wipro, it's largely remained flat at 17.3%. It's the lowest amongst the 3 in terms of the absolute EBIT margin numbers. When you also look at, the TCV growth, and that was, I think, the only silver lining essentially. The deal wins was very strong in this particular quarter, 19% quarter-on-quarter growth for something like a TCS, while Infosys only reports the large deal wins, which have been slower for most companies, 4.2% growth for something like an Infosys, while for Wipro, it's been 13% quarter-on-quarter. But most brokerages have come out and mentioned that the deal wins is not translating into revenue as well as profit growth, and that's visible because of longer lead time for ramp up of these particular deals. When you also look at the attrition rate, and that's something, while it is not alarming levels, it's still starting to inch up on a quarter-on-quarter as well as on a YOY basis. So for TCS, specifically, you've seen a 30 basis point increase in attrition on a quarter-on-quarter basis, 80 basis point on a year-on-year basis, while for something like Infosys, it's much starker, 40 basis point on a quarter-on-quarter basis, 150 basis points on a year-on-year basis, and similar feat for Wipro as well, an 80 basis point growth on a year-on-year basis, while quarter-on-quarter, it's actually fallen by 30 basis points. So that's the only one. And finally, in terms of guidance, and we've spoken a lot about this, TCS does not report any kind of guidance for FY26. On the other hand, Infosys has come out with a 0 to 3% growth for FY26 in terms of revenue, constant currency. That was expected to be between 2 to 5%, so another lower. And for Wipro, they only report guidance for Q1 of FY26. Essentially, it's expecting a 3.5% to a negative 1.5% fall in revenue in Q1. So essentially, large cap peers, we'll see HCL Tech report results tomorrow. On 24th, we are having 5 mid-cap IT earnings. It's expected to be somber, but growth commentary for mid-cap IT is expected to be better than large cap. But overall, lots more to discuss with our next conversation going into IT as well as the earnings this week.
Thanks, Puneet, for that. And while India's $280 billion IT sector is bracing for a challenging FY26 following 2 years of subdued growth, confronted with global uncertainties, tariff war, the rapid evolution of AI, and the expansion of footprint of global capability centers, the hurdles, like we have been mentioning, are only mounting. Haripriya now joining us to delve deeper into these pressing issues and shed light on the road ahead for the industry.
India's IT sector, after 2 years of muted growth, is again set to see one more challenging year in FY26. The hope for revival, which was to be seen towards the end of last year, is again now set on a back foot. The global uncertainty amid tariff wars, the AI disruption, and the rise of global capability centers face as the major headwinds for the sector right now. We saw the reflection of this in the fourth quarter commentary given by the management of the top IT companies. TCS called out that they are seeing project deferrals. Wipro is skeptical of the deal conversion, even if they have a large deal pipeline. All the 3 IT majors reported weak results and are expecting a soft start to FY26, which could be seen in the guidance given by Wipro and Infosys. Analysts we spoke to say that the IT services spending growth will reduce from the expected rate of 4 to 5%. The CLSA projections for IT companies are also in low single digits for FY26. For TCS, it is 0.2%, Infosys 3.3%, and Wipro 1.6%. IT sector is also at a point where it is looking at pivoting its business model while there is a rise of AI disruption and competition in the industry.
Absolutely, facing these new hurdles in FY26. Meanwhile, let's